And of course, welcome to another analysis. Now, today we're checking analysis, we're starting with synthetic, and of course, we are using trading view for today's analysis. So, of course, as usual, we are going to mark out the recent structures where this will serve as our recent low, the low where the market is currently respecting or is likely to respect, and of course, here serves as our recent high. I'm sure by now you know what happens to our recent lows and our recent what we are actually using them for. Now, a break below this and a retest of this tells us a major time bearish movement, and of course, a break above this and a retest tells us a major time bullish movement. So then, currently, the market is currently on our support level. So let's see what is likely to happen. So what we're gonna wait for is go to the entry time frame, and of course, on the entry time frame, what do we want to see? We want to see a break below that. That means the market moving below that with good momentum, having a retest, and of course the retest will come with minor momentum. That means the candlestick shouldn't be that of a bullish sentimental. Let me use that word. So it should be more of bearish. So what we want to see now around this level is for the market to actually give us something like this. That market actually coming down around here, having a retest of then of course we think of going short on this. But if that does not happen, what do you want to see? Then want to see a minor change of structure inside this zone. For us to think inside this zone, for us to think inside this zone, you want to see a minor change of structure. That means the market probably breaking above this recent high right here. Then you can actually cap to this level. But for me, what I'm expecting break out above this and a retest of this, then I think of going long, or a break below this, a retest of that, then I think of going short. So for minor to your structure, waiting for it to get to this level, for me, it's already on the high side. So I've just let the market run. So since it's already on the bearish side, I'll actually prefer a break below this and of course a retest of that, and then I can think of going shorts on that. So that's for the volatility 75 1 seconds. And just as a reminder, if you don't know the broker that actually made this available, it's actually called Deriv. And of course, their link will be in the description. They are available 247. You can trade the synthetic market 247, no fundamental required, just pure technical. If you can analyze it properly, then you're good to go. So if you're sure you can analyze the market properly, then this trade is or this asset actually for you. So just check the description. Dropping a link there for you to register with them, and of course you have several benefits, of which if I start mentioning, I'm sure this video might get extremely too long for that. So then let's go to the next. So it's going to be volatility 75, and of course the same thing happens. We mark out the recent high and the recent low. Now here is the recent rejected point, of which we see be going to H1 to mark, and here is the recent low right here. So let's go to H1 to confirm this, because on this zone right you can see a lot of rejections. And so we just have to go to the H1 to confirm which rejection is actually very much valid. So you can see right here, so that means this is the most valid recent high, and of course here is the most valid recent low where the market is expecting. That's why it's most times it's good to confirm. Now, what do we do inside this zone? We wait for a change of structure, either to the down or to the up. The best position for you is to wait for a market a breakout above this, a retest of this zone, then going long, or then you can still wait for a break below this, a retest of this, then think of going short. So this is what I'll be expecting. So it's still for us to wait. And remember, I'll be dropping the alerts, and then on the alerts, that's where I tell you which I'll be doing. And in case the market happens to break above this, I'll drop the alerts to inform you about that. If it breaks below this, I'll also drop alerts to inform you about that. So that's that for volatility 75. So let's go to the next one, which is going to be boom 500. So let's go to boom 500. Okay, now we're starting here on boom 500. Of course, as you can see, boom 500 has been on the sign, and of course we don't see because it's on the bullish sign a long time. That does not mean a day trade cannot have a minor bearish pullback. But then let's see mark our recent high and our recent low. Here is the most recent high currently, and of course the most recent low. At this level, if I'm to mark, I'll mark this zone, but then this is actually too low. So if you're taking somewhere around this level, but then we still have to go to the H1 to confirm that this level is actually valid, because right here is not too giving us that validity. So let's go to the H1 to confirm that this zone we just marked is actually very much valid. Now the H1, yes, is valid. You can see it right here. There was a lot of testing and retesting right here, telling us that this market is likely to move above this if it gets holds, and of course it holds. So now what the market going to do? Now two things, what I'll be expecting, I'll be more of the bullish side, especially the market just break out above this, have a retest of this, then I go long. This is my major entry for this. Then on the bearish side, if I can see the market going below this, a retest of this, then I think of going short. For me over, okay, what's going on? So let me just delete this and mark it a bit clearer so that you don't get confusing. So I said a break below this, a retest of that, then I think of going short on that. But then for me, I'm still more of on the bullish side because this is already a bullish market. So I just prefer the market going above this, and of course, it's testing it for me to go long. And please remember, I've got the alerts to let you know which I'll be dropping or which I'll be trading. And just as a disclaimer, let's remember this is not more like me telling you must trade it this way. No, I'm only telling you what I'm looking at for today. So please do it to check out the analysis, compare it with your own analysis, and see if they fall in line. And if it does, fine. And if it doesn't, just always know that don't risk more than you can afford to lose. Nothing is actually guaranteed in this market, but then we still have to do our best to analyze the market and of course get the best out of it, just the way we've always been missing. Now let's go to the next one, which is Crash 500. Now Crash 500, this is the most recent. Let me just mark this for I might have to change this after going to the H1. Then this is the most recent low. Remember, I'm have to change it because I'm currently looking at this as more. Let's see if that first one is actually valid. So we want to see if this first one is actually valid. If it's valid, no, it's not valid. So that means here is the main zone right here. So what we're expecting, let us take this around here. And of course, you can move this two back. So I thought they can be in the same line. So you can see now the market more like moving in a range. So what do you want to see? A breakout below this or a break above this. I repeat, a break below this. Already, I think I'll just go back to the high time frame to check if you're having, if the market is full-time bullish or full-time bearish, or a break above this, retest, and of course, then we think of going long. But then let me see. Okay, this is actually H4. Okay, on the H4, you can see the market was actually on the bullish side, but then we can see it seems to see a minor. We like all these. Let me draw that again. Okay, so we can see, so that means it's still very much valid. So a break below this tells us a big time bearish. You can see it's still going to validate as trend line, and of course a break above this tells us a good time bullish. So this is what I've still been looking at. But then for the internal state of structures, let's say we can have series of new highs or new lows. That tells us what to do inside this. But for to be on the safer side, just switch for a breakout above this or below it. That said, let's go to the next one, which is going to be the 1000 series, and that is 1000 boom and 1000 crash. So starting with 1000 crash. Okay, now this is 1000 crash, so let's go to H4 once again. Now on H4, we're going to mark our recent high and our recent low, and of course, what I just click. Okay, here is a recent low. Of course, this is where the market is currently expecting. Now let's go to H1 to confirm our recent high. The most recent high that is likely to validate this whole trend and that led to this bearish level is right here. That's the most recent high. So what you're expecting, and I'm sure if I know you know, the break below this is a test of, and of course, we think of going short, and a break above this, we think of going long. But then to here, but if you want to be on the safer side to think of a major bullish movement, this is the most recent high. Like this is the recent, how do I put this now? This is the, let's say the high. Okay, let me just call it higher high right now. So a break above that tells us that this market is ready for a big time bullish move. And of course, if you have a break at above this and of course a test of this, then you can just target this. Then they break above this, the test of this, you can leave the take profits open. Of course, your stop loss is always very necessary. I always say like take profit for me, I prefer putting stop loss than take profits. So if I'm going to put my stop loss tells me like this is the minimum. The market gets here, take me out. Instead of leaving it open and hoping the market come back to you. I think I watched a video on that. Someone was saying stop loss is a scam and the rest. I should not use stop loss, let the market run. Definitely is going to come back. But for me, I'm not a fan of that. I prefer using stop loss so I can know how much I can afford to be. I can't put my $10,000 in the market and I just leave it open, hoping that the $10,000 is much, is high enough to withstand it. No. If I'm risking 2,000, it's 2,000. If I'm risking 10,000, it's 10,000. If I'm risking 5,000, it's 5,000. So that is better than saying I should. Anyway, everybody has their own opinion. Just as I've already said it, this is my own opinion of what I think. So everybody is what will I say? Everybody is free to give their own opinion.